Hey everyone and welcome to this video. Now in this video I just want to share a really simple, however really underrated and profitable strategy with you guys. It's a pretty well known strategy, so I won't make this video too long, and with that being said, let's get right into it. So we're just gonna look for the golden cross and death crosses. I personally believe that a lot of people don't know the value of these crosses anymore, and I also want to tell you guys that I've got my own numbers. And that's because I believe that if you're going to use the 50 and 200 EMA, there will be a little bit too much false signals. However, if you're going to up the 50 to 100 and the 200 EMA if you're going to up the 50 EMA to the 100 EMA and the 200 EMA into the 225 EMA, you will actually have a lot less false signals and the crosses will still be valuable. And that's what I want to show you guys as of right now. So let's say we're going to start with the tradings as of right here, for example. You're just going to look for any crosses of the 50 and 200 or 100 and 225 EMA. If the shorter time frame EMA crosses over the higher time frame EMA, it's called a death cross. And this will mean or indicate that the market is in a downtrend, and if you want to make a profit, you should short the market. And if the shorter time frame EMA goes over the higher time frame EMA, it's a golden cross. And this will indicate that you're in a bull market, and if you want to make a profit, you should buy or long the market. Now if you're not sure how to install the EMA, you just want to go over to indicators and search for EMA, and I myself always use the EMA ribbon crypt. The reason for that is because you can use a lot of EMAs and you can also enable and disable all of them. And if you want to change the date, just go over to inputs and go over to the two EMAs you have still visible, so you want to deselect all of the other ones. And then just change it to 100 and 225. So right here is a death cross. The 100 EMA crosses over the 225 EMA. So now I'm going to select price range. And you can then see that if you bought into your trade right here, depending on whether or not you cashed out on this, it's not really a cross. It's more like they're on the same level. So depending on if you made a stop loss right here, you would have made a 5% loss. If you would have used the trailing stop loss, which I recommend all of you guys using, the first trade would have been somewhere between a 3% loss and like a 8% profit. Now right here is the next cross. This is a golden cross and it's indicated by the fact that the 225 EMA is right here and the 50 or 100 EMA crosses to the upside. So now you're just going to open the long position. Right here you would have entered. The stop loss is totally up to you. I'm not sure where you would have set it. However, you can see that you made a 13% profit. And the reason I always recommend using a trading stop loss is because if there's a dump like this, you don't want to lose all of your profit just because you had your take profit a little bit too high. So that's actually the reason why, if I'm trading, I myself always like to move my stop loss up with the rest of the price. So let's say that right here you would have set your stop loss on this level. I would have set my stop loss at the 12% profit already, or actually not 12% profit, at the 4% profit. Because this wick indicates that there's a lot of buy strength or buying strength right here. And then you would have been cashed out right here and you'd still be left with a 4% profit instead of a 7% loss. So that's the reason I always prefer using a trailing stop loss. Right here is the next cross. It's a death cross, which indicates that the market is in a downtrend. And if you're going to use a trailing stop loss, you would have had a 4% profit. If you did not, you would have had somewhat of a loss, depending on where you would have set your stop loss. Now right here is the next cross. In this case I have to be honest, it's not really a cross, it's once again, it's more on the same level. So I myself would not have joined here. However, if you would have walked away with somewhere between a 4 and 10% profit. Now right here is the next cross, it's a death cross, so you're going to short the market. Now your stop loss is going to be, for example, somewhere above the 200 EMA or the 225 EMA. And you can then see that you would have walked away with a profit of at least 8% and maybe even 20% or 18%. Which is really great. Now right here is the other next cross. It's a bull cross or a golden cross. So you're going to open up a long position and you can then see that you would have walked away with somewhere about a 5 to maybe even a 10% profit. Which once again is really crazy. And right here is the next cross. It's once again a death cross. So you're going to open the short position. Maybe you would have been stopped out depending on where you'd set your stop loss. And then you could have walked away with once again a 22% profit. Now please be aware that I'm charting on the 1 hour chart, and for the profits I'm just calculating spot trading, so trading with a leverage of 1x. However, if you're trading on the shorter time frames like the 5 minutes or 15 minutes, there may be a chance you're going to use a higher leverage. So even if you're only making 5%, If you're going to use a 3 times leverage, that would have been 15% profit. And right here is once again a golden cross, so you're going to open up a long position, you would enter right here, and then you would have made a profit of somewhere about like 10% if you're cashed out at the top, which is unrealistic. So let's say it would have been a 6% profit, and if you're going to use the trailing stop loss, it would have also been a 6% profit or something like that. Right here is the death cross, and once again you would have had a profit of maybe even 12%, and if you're really one hell of a hodler, it might even be 20% or 18%. That was it for today's video. I hope I explained it clearly. If there's anything you want to ask me, please go ahead and ask me in the comments down below.